Welcome to the Compliance Officer's Playbook podcast. You've tuned in for today's deep dive, and we are jumping right into a huge global expansion story.
A really big one. It's right at that classic intersection of cutting-edge fintech and some very complex, very nation-specific financial regulation.
We're looking at Wise, the London-based fintech giant, and their critical new approval in South Africa from the South African Reserve Bank, or AP.
It's a landmark moment, really, and it's a perfect case study in how global policy, specifically the G20 mandates, is starting to force big shifts in local compliance.
So Wise is the first test case, in a way.
In Africa, yes, their first license on the continent. It shows how these international rules are becoming drivers for tech change, not just guardrails.
Exactly. So our mission today is pretty specific. We're going to break down what this Category 2 license actually means.
And why South Africa? Why they're first?
Right. And how this whole move ties directly into those international commitments to completely change how we send money across borders. This isn't just about moving cash.
No, it's about compliance and policy sort of leading the charge toward real transparency. Wise is basically aligning their entire business model with that high-level G20 roadmap.
Okay, let's start there with a regulatory breakthrough itself. Wise secured what's being called conditional approval. What does conditional actually mean in practice here?
The word conditional is, it's crucial. It tells you a lot about SARB's rigorous approach. It means Wise has passed the first incredibly demanding phase.
So all the paperwork, the robust KYC checks, proving their systems are resilient, all that stuff.
Exactly. They've detailed how they'll adhere to South Africa's very specific exchange control regulations, but, and this is the key part, they're now under a mandatory period of close observation.
So it's like a probationary period. They've cleared the first hurdle, but now they have to prove it all works in a live environment before they get full, unrestricted approval.
Precisely. It protects the integrity of South Africa's financial system while still, encouraging innovation.
And what about the license type? A Category 2 authorized dealer in foreign exchange with limited authority. That sounds very specific.
It is. The limited authority part is what defines their scope. It means they are focused strictly on processing low-value, high-volume outward payments.
For personal customers only, I read.
That's right, just personal customers to start. So this immediately clarifies their entry point. They're going after that massive consumer remittance corridor.
So they're not, for example, handling complex corporate treasury or huge capital transfers like a Category 1 dealer might.
Not yet. It's a strategic way to mitigate systemic risk. You let a proven global player in, but you limit the size and nature of the transactions at first.
And this is, as you said, their first ever license on the entire African continent.
A huge deal for them. The immediate focus is just on getting those foundational rails built, proving they can meet all of SARB's reporting rules, and then they can start pushing their core mission.
Which is more transparency, lower FX costs, and faster transfers for everyday people. Do we know their timeline for moving beyond just personal customers?
Well, their public goal is pretty clear. They want to use this approval to build out their local tech stack, introduce more products, and then, over time, expand their authority.
But for now, success is just demonstrating they can run a scalable, compliant consumer remittance operation.
That's it.
That makes a lot of sense. But let's shift to strategy. Why South Africa? It's a question a lot of people ask. You've got markets like Nigeria or Egypt with much larger populations.
Right, and potentially more raw transaction volume. But it really boils down to a blend of market demand and, crucially, regulatory structure.
So it's not just about size, it's about maturity.
Exactly. South Africa is consistently cited as the continent's largest economy, and it has one of the most advanced and, structurally organized financial services hubs in the world.
So for a company like Wise, which runs on this idea of radical transparency, that structure is vital.
It's everything. They have to tightly integrate with local regulatory reporting, especially around exchange control. The South African environment is predictable enough to support a special license like this, making it a safer entry point.
That's a really important distinction.
Yeah.
They need a jurisdiction that actually facilitates their compliance model. Okay, what about the consumer need there?
The demand is intense. You've got huge, consistent, cross-border payment flows, both in and out.
Plus high digital adoption, I assume.
Very high. And a massive, globally dispersed diaspora. People just need to send money home reliably and, cheaply.
Which brings us to the core problem they're trying to solve. the cost of moving money through the old legacy systems.
Absolutely. Nadia Costanzo, who runs expansion for the region at Wise, was very direct about this. She said that even though South Africans are some of the most digitally savvy consumers,
They're still stuck with old problems.
yeah, she said they still face high costs, poor price transparency, and slow, inconvenient processes when sending money abroad.
It's the classic story. You have modern digital expectations hitting outdated financial plumbing.
You really shouldn't have to wait 3 days and pay a bunch of hidden fees just to send money across the border in this day and age.
And that's where Wise comes in with their promise of a faster, cheaper, and more transparent way to do it.
That's the brand promise.
But let me push back on that for a second. On the cheaper part, local competitors can sometimes offer very aggressive introductory rates, right? If Wise is just using the mid-market rate, how do they compete?
That's where the power of sustained transparency comes in. A traditional provider might subsidize a great headline rate.
But they hide the costs somewhere else.
Exactly. In the hidden exchange rate markup, or in some processing fee that only shows up at the very end, Wise's advantage is consistency.
You always know what you're paying.
Always. They show you the true mid-market rate, the one on Google, and they only charge a small, transparent fee that you see right up front. There are no markups. It builds trust over the long term.
And that commitment to transparency is what connects this whole thing back to major international policy. Let's talk about the G20 mandate.
Right. This is where we shift from a business story to a geopolitical compliance story. South Africa is a key G20 member,
Which means they've publicly signed on to the G20 roadmap for enhancing cross-border payments.
which is this huge top-down mandate to modernize global finance. The goal is to make all international payments more accessible, transparent, faster, and cheaper.
By that non-negotiable deadline, 2027.
And that deadline means regulators like SARB are actively looking for solutions that help them hit those targets. Wise showing up 3 years early is, well, strategically perfect for both sides.
So which part of that G20 roadmap does Wise help South Africa with specifically?
They are a direct solution for building block 2 of the roadmap.
The building block 2 is all about.
It's specifically about the transparency of information provided to end users. The G20 is demanding less complexity, less opacity around costs. Wise is basically pre-built compliance for that entire block.
And they do that with the mechanism we just talked about, the mid-market rate.
They guarantee it. No hidden markups. The rate itself might fluctuate with the market, but the methodology is constant. You see the fee up front before you hit send.
Which is the opposite of the old model, where a provider would lock in an inflated rate and just pocket the difference.
That's the practice they're trying to end.
But doing that in a country with tight exchange controls must be a huge technical challenge.
Oh, absolutely. And that's why the approval is still conditional. They have to build a local tech stack that can talk to legacy SARB systems in real time.
So a traditional bank might report its Forex trades in slow batches. Wise has to do it instantly for every single transaction.
While maintaining those super fast speeds and low prices, it's a massive compliance engineering task. They're not just building an app. They're building the financial highway it runs on.
And this hasn't gone unnoticed politically, has it? This got attention all the way up to the UK government.
Yeah, we saw a direct, very high-profile endorsement from the UK Prime Minister, Keir Starmer.
What did he say?
He said the expansion strengthens ties between our nations and showcases British excellence in building solutions.
That's a pretty big shout out for a regulatory license. It turns a corporate win into, like, a national commercial success story.
It really does. Starmer even pointed out it's good for British jobs, good for growth, and good for business.
And to give people a sense of the scale we're talking about, let's just look at Wise's global footprint. This isn't a small startup.
No, not at all. The numbers are staggering. In their last fiscal year, Wise supported about 15.6 million people and businesses,
Wow.
and they processed over $185 billion in cross-border transactions.
But the number that really stands out to me is the savings. They calculated they saved their customers around $2.6 billion.
And that $2.6 billion is a direct measure of the money that was being absorbed by hidden fees and bad exchange rates in the old system. It's powerful proof that the G20's focus on transparency is absolutely justified.
And this move into Africa is just one piece of a much bigger global push, isn't it?
Oh, for sure. This comes right after they secured final licenses in the UAE, which is another massive remittance corridor. And they're partnering with huge banks like UniCredit in Europe and Lunar in the Nordics.
So they're embedding their tech everywhere.
Okay, so for everyone listening, what's the single most important takeaway from this whole development?
I think the core takeaway is this. Regulatory collaboration, like what we're seeing with SARB and fintech innovation, aren't enemies. They're actually working together to drive global finance toward those G20 goals.
With South Africa now acting as the main test case for the continent.
Exactly, setting the
A
standard.
compelling vision for the future. So here's a final provocative thought for you to chew on. If this model of radical upfront transparency really works in a challenging market like South Africa, what kind of pressure does that put on traditional banks and remittance providers everywhere else? Could market competition actually force them to abandon hidden fees well ahead of that 2027 G20 deadline? It implies the market could become a faster and more effective regulator than the policy itself, all driven by what customers now expect.
A powerful analysis. Thank you for joining us for this crucial exploration into global finance and compliance. If you love this show and rely on the deep dive to get smart quickly, you can become a paid subscriber today for $5 USD, and get full access to all premium episodes packed with insights, stories, and values you won't find anywhere else. The link is right in the show notes.
Thanks for listening.
Subscribe if you like the content, and we'll catch you on the next analysis.